Hi, this is Eric Dunavant with Dunavant Wealth Group, the Dunavant Wealth Recap for the first quarter of 2013. Well, the markets are off to a strong start for the first quarter. The Dow and S&P 500 both hit new all-time highs. The U.S. markets gained 10.5%. International markets were up just over 5%. On the economic front, there were positives in the first quarter. We saw the aggressive action of the Fed's QE policy give investors and business leaders a lot of confidence. That's boosted stock prices. It's also increased consumer spending. The U.S. economy seems to be humming along, and there's lots of reason to hope for strong first quarter GDP growth. Actually, some forecasts put GDP in the first quarter as high as 3.5%, and that'd be a significant improvement over the 0.4% we saw in the fourth quarter of 2012. Housing prices are increasing across most of the country. There's a February report that shows that permits for future construction increased at the second fastest pace seen since June 2008. Unemployment has also seen some recent improvement. The latest report showed that jobless claims decreased in 22 states, while wages increased in 42 states. Overall, that yielded an unemployment rate of 7.7% in February. What about things to watch going forward? It's not all good news necessarily. Well, we've got the uncertainty from the sequestration. We expect the impact of government budget cuts will probably drag on the markets in the coming quarter. And if lawmakers don't come to an agreement, federal spending is going to drop by more than $40 billion by the end of the year. That's a lot to lose. There's trouble in Europe. The Cyprus banking situation was resolved with a $10 billion euro loan and raiding of depositors' bank accounts. EU officials, they've set a bad precedent that may have long-term effects on the banking sector. Certainly worth watching. But it's going to take cooperative and comprehensive action to fix things in the EU. And currently both Italy and Spain are close to needing some money from bailouts. This month's news or noise? Well, the markets are at all-time highs, and many people are wondering if this is the beginning of a new long-term run. And although we can't rule it out, we certainly want to remain cautious. Investment manager John Hussman observed that current market conditions and described them as overvalued, overbought, and overbullish. That's based on some specific measurements that he follows. That trifecta, along with rising yield conditions, has not played out well in the past. There are other investment professionals that we rely on heavily, and they also have concerns about current conditions. In short, I think we have to be careful. Overextended market conditions aren't a problem because they stop the market from advancing. The challenge is that they can wipe out weeks or months of market gains in just a few days. The losses from 2000 to 2002 wiped out 6 years of market returns. The losses from 2007 to 2009 wiped out 14 years of excess market returns. Each investor situation is unique, but if you've got more questions, give us a call. We'd be happy to discuss how we're recommending our clients balance the risk and opportunities that are in today's environment. As always, would you please send us your prayer requests? We pray for our clients every day and would love to pray for any issues that you have. Securities are offered through LPL Financial, member FINRA SIPC. Investment advice is offered through Dunavant Wealth Group, a division of Cardia Planning LLC, a registered investment advisor and a separate entity from LPL Financial. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Thank you so much for joining us. We'll see you again at the end of the second quarter. Blessings and take care.